cover some week to date and intraday trading examples in the Nasdaq futures. I did not trade this week due to rollover, but there's still plenty of examples to cover, so we'll get right into it. If you are not subscribed but you enjoy the content, please subscribe. If you are subscribed and you're returning, please leave a like and share. It really does help the channel a lot. So diving into the Nasdaq here, going into this week, which begins with December 11th, going to this Monday, Tuesday area. So looking at Monday, what we see on the intraday is a 50% short to kick off the week. Now, this is very micro, and this is around 1 a.m. on Monday morning. So this is Eastern time. So not really a time to be trading for me, but still good to see it here. We end up breaking the short setup. So there could be a potential long setup now. And that break occurs around 4:30 in the morning. The long becomes tested around 5 a.m. So I still would not be trading in this situation. I don't really trade at all until after 8 a.m., but for the most part, after the bell at 9:30. So we're just observing here when we get to the screens around 7:38. Now, this long ends up failing. And so what we end up doing is retesting the short setup. And then eventually we fail this short and have a nice move higher at the bell. So what ends up happening, because we failed the short setup and we make a higher high on the day, now using the swing low of the day, we have this 50% long immediately to kick off the week. And this traded around 16,303.75, and then it rallied to its target of 373. What I typically will try to do is take two contracts, whether it's micros, minis. I try to have it where half of my set can get taken off at the opposing. So in this case, around 620, I would take off half of the position. And then the last half of the position, I would start scaling out or look to go for that target around 373. So with the minis, typically I'll take two, exit one at the opposing, exit one around the target or at 3 times risk. If I'm trading micros, there could be several micros, and so I may scale out at 2 times, then 3 times, and so on and so forth. And the risk is just going to be the space between the 50 and the 61.8, putting that stop just outside the 61.8 level. But we end up completing this target, and all we're going to do now is draw the next 50% long in the sequence using that swing low that we had prior to the new swing high. And we see the next long come into play around 337. So immediately we see a long trade pretty much after the bell. And then that completes the target. The next long setup ends up coming into play again. And that also would run to its target. And again, you can do that method where you look at the opposing, take half the position off, and then you go for the target afterward. That ends up completing. Now, after that completion, we have another next 50% long. This time it ends up failing. And what the NASDAQ ends up doing after this failure is it actually ends up pulling into the original setup to the new high. So the full 50% long trades again here at 334 half. And then once again, you could take half off at the opposing around 370, and then take half off at that target. And that's a pretty good start to the week right there. Very technical trading, especially for rollover week. Typically, I don't trade over rollover week just because you have these institutions and larger investors that are rolling into these new contracts. They don't necessarily care about the intraday price action. So it's not as technical trading usually, but this week we're not seeing that be the case. It's very technical. So this target completes. And now we have two variations. There's the week to date sequence, and then there's the intraday sequence. So for the week to date sequence, what we can begin to track is going to be the next 50% long and the same setup new high, the full 50% long. And we can see that the next 50% long becomes tested and ultimately ends up failing. That would likely be a stop out on that position unless you were to put all of your stops beneath the larger 61.8. But for the most part, this is a losing trade. That is a stop out. So we would lose on the next setup, take the full around 402. This ends up once again running into the opposing. So you could take half the position off there around 470. And then it ends up running into its target the next day around 617. So a really nice move there, over 200 points from the 50% level for that particular trade. Now that's the week to date sequence. On the intraday, we can dive into Tuesday here. and we can see that there was a 50% long that traded around 463, and this completed its target, and so we could look for the next setup in the sequence. And that next setup ends up failing, and so does the full setup. If you take the original setup to the new high, that full setup also fails. So because of these intraday failures, we know that we have room to head lower into the next and the full week-to-date long setups. So we have room to run down into that next setup and then eventually the full setup as well, like we saw. So because of this area and room to run lower, that's going to allow for potential shorts to come into play on the intraday time frame. And we see a 50% short trade around 16,507. And that ends up running to its target at 448. If you want to take that counter trend trade with the short, you could. You could once again exit at the opposing around 490, and then again at the target around 450. Or you can simply just sit on your hands and you can wait until the next and the full week to date setups become tested. And ultimately, again, that next week to date setup would have failed, but then the full week to date setup ends up holding, and that's going to definitely cover the losses on the next setup that failed. And if you take the short setup as well, that would also certainly cover the losses of that next setup that failed. So really great opportunities Monday and Tuesday. So now we have this week to date sequence that's holding, and we saw the full 50% long complete its target. Now, FOMC was yesterday, and there was a potential next 50% long around 527. And this did not come into play. The market rallied aggressively higher and ended up running into a high to high setup, which are referred to as extensions. And that 50% level nearly came into play around 680 and then ran to its target of 867. So really big move there. And you could once again just take the same setup to the new high. And that is currently what is being tested or near being tested, is that high to high setup to the new high, which has a target of 16,954 or 64. What we can also talk about is the intraday sequence on Wednesday. So we see this aggressive long carrying higher, but on the week today, the intraday, let's keep in mind about what's happening. So on the intraday time frame, we have FOMC at 2 p.m. Eastern. And what we can look for really on Fed days, what I typically do if I'm going to be trading, and yesterday I came back in the afternoon and observed the market. If I'm going to trade FOMC, I don't typically have many trades leading up into it on the day. I like to just kind of see how things play out. If there's a really good setup, I'm probably going to take it. But for the most part, I'm just observing, because most times on an FOMC day, you're going to see some back and forth and just waiting for that economic release. There's not going to be a ton of movement until 2 p.m. So you're better off just waiting. And what I like to do between 2 and 2:30 is see where the market is going and then try to find Fibonacci trades based on that. Because at 2:30 p.m. Eastern, you have the press conference where Powell gets on the mic, and what he says, the questions he answers are going to affect all the ticks in the market. And so it can be harder to day trade on those smaller time frames when he's just talking into a mic and answering questions like that. So once 2:30 comes, I tend to ease up a little bit and just observe. Unless, again, there's a really good setup, then I'll go ahead and take it. So yesterday afternoon, we see at 2 o'clock this large move higher in the Nasdaq. Really, all the indexes were heading higher. So we have a higher high, breaking the opposing shorts in the day. And so all I'm going to track here is just a full 50% long from the breakout on the day. And we end up seeing this become tested at 691 quarter. And from there, you break the opposing short setup. So you could take half the position off there. And then once again, that target completes, you can take the other half off there. If you can't hold during the overnight, then you could exit before the market closed and still have a pretty good profitable trade. And even on the micro time frame, very micro time frame, there may have been an inside 50% long around 720. So those are just some good examples there covering the week of potential trade setups in the Nasdaq. Again, just going over the intraday and the week to date sequence and how I analyze and then look for trades based on that. What I'm analyzing is just pre market data. What's the market doing? What setups are holding? And then if current trends fail, we can look for reversals. And if current trends are holding, we can just keep following that trend and see what setups are in play and coming up next. So that's how Fibonacci allows me to analyze the market and then find trades based on the 50% levels and then exit. If it's going to be a stop out, that 61.8, that red level helps with that. If it's going to be a target, I look at the opposing setup and I also look at the initial target from the original trade using the negative 23.6% level. So that again is the intraday and week to date sequences that I like to track, and that's how I typically do it. And this is an example with the Nasdaq. If you want to learn more about these strategies, I have plenty of more videos that go way more in depth in the trade room, and you can join that by going to FibonacciForecasting.com and clicking on the trade room. And you can see a description of that and get some more information by clicking on the trade room itself. It's $149, one-time payment, that's it. But you can use the code holiday trading, all caps, and you will get $50 off. So it's $99 after the code holiday trading, all caps. So if you like this, leave a like, please subscribe, share. It really does help a lot. I appreciate it. And I'll catch you guys in the next video.